one of the things that I see other people who are real estate educators or so-called real estate educators doing is basically posing in front of supercars and a private jet and a mega yacht and in front of a mansion and sitting poolside with a bunch of people scantily dressed, frolicking in the pool behind them. That's not me. That is what you could absolutely do with the wealth from real estate if that's what you want to do. I'm going to tell you right now, I don't have a private plane. I don't want a private plane. It costs too much money and it's a waste of money. I could use that money to invest someplace else. Do I fly on private planes? For the most part, no. Have I? Yes. If I have clients and we're going someplace and we're doing something, then I have a membership in a organization that basically has private planes. It's kind of like a timeshare for private planes. I get so much time in a private jet wherever I want, and I can use that up and then I can pay for additional time. It's still cheaper than owning my own private jet. Usually it costs about the same as flying first class someplace. I am not opposed to flying first class. I'm not opposed to flying coach, except that it's 6'7". It doesn't make it very easy. So I typically fly first class because I need leg room. So no private jets. You're not going to find me posing in front of any private jets. I have boats. They're not mega yachts. They're great boats. I enjoy them. They're what I need and what I want. Don't need a mega yacht. Mega yachts for people who are boaters like myself. It's not fun. I like going out and being able to sail my boat, or for the power boat, be able to actually play on the power boat. A mega yacht doesn't do the same thing. I don't want a mega yacht. Supercars, I am a car guy and I have way too many cars, and we're not even going to go into that. But my point is showing you pictures of supercars and mega yachts and private jets and barely clothed people in the pool is not going to make you an investor. It's not going to encourage you to be an investor with real numbers. And that is what I am going to try and bring to you over and over and over again. Real numbers. So the numbers that we're going to go over right now are actual numbers in an actual market where I invest and where we go on real estate buyers events. So these are real world numbers, and these are literally numbers I put together based upon actual numbers that we are using and that we are getting today. These are all numbers that I put together this morning, again, based on real numbers. Take a look. All right, so let's get started on these numbers. Again, these are very real world numbers, and today is November 20th, 2019. So these numbers are valid as of today. So if you're watching this video in 20 years, please don't expect these to be valid numbers. If you're watching this video in the next year or two, these are still going to be essentially the same numbers for this particular market. I'm going to give you numbers based upon the property that we're looking at right here. This is a fairly recent photo. You can still see the remnants of the Halloween decorations hanging from the building. The numbers that we're going to use are very conservative numbers. I'm going to go over each one of them with you. I'm going to tell you how they are conservative because I am giving you the numbers. I'm going to give you actual numbers on this particular property, but I'm also going to give you numbers that you can expect all day long, easy, no effort required, that you can expect to receive on these types of properties in Cleveland, Ohio. And I'm bringing Cleveland, Ohio up because the next available buyer's event that we have is for January. We've also got a February of 2020, and that's in Cleveland, Ohio. Both those months we're going to be in Cleveland buying property, and that is because Cleveland is such a great spot for buying these types of properties and seeing these types of returns on our investment. And I think you're going to be blown away when you see the types of returns that we're talking about, even with conservative numbers. So today we're focusing on Cleveland. This duplex is in Cleveland, Ohio. And let's move on straight to the numbers here. I purchased this property. This duplex was purchased with $10,000 down. The mortgage, if you're paying 5.5% interest, I'm actually not, but a new investor with reasonable credit all day long can expect to find a mortgage for 5.5% interest. You should be able to find one for less if you want to shop around, but 5.5% is not unreasonable for a mortgage. So we're calculating it at 5.5. So you have a $284 a month payment, which is going to be your principal and interest. Property management, I calculate this at 10%. You will be able to find property managers that manage for less, but for the sake of running your numbers, calculate it at 10%. So $120 for property manager, because the low rents for this building, the absolute bare minimum, is going to be $1,200 a month. Our property tax, and I don't remember actually what the property bill was on this thing last year, but based upon the purchase price of this property, not the county assessed value. The county assessed value is actually less, but based upon the purchase price, factor $100.41 for property tax. Again, the actual property tax is less, but for the sake of doing these numbers and getting this out to you today, the estimate is based upon the purchase price of this property. I set aside $100 a month for maintenance on this property every single month. We've been lucky, we don't really have any maintenance issues because it is pretty well taken care of, but you're always going to have something you're going to have to do with a property because it's just the nature of any type of physical thing. It's going to run down, even ourselves. So whether you have a car, whether you have real estate, whether you have pets, there's going to be maintenance involved. I set aside $100 a month for maintenance. That money goes into a contingency fee. It is pre-tax. No money is paid on it because it is never considered income. It sits in a bank account, it earns interest, and it waits there until we need it. The extra money that I receive, for example, by saving on property management, because I still factor 10% for property management. If I pay closer to 6% for property management, I put that 4% difference also with my maintenance and my contingency factor. Our vacancy factor. Vacancy factor for Cleveland is 6%. We can look up vacancy factors online. We can get them from local real estate agents. Right now, Cleveland is 6%. My personal vacancy factor for my properties is not 6%. It is much, much lower. However, for the sake of running numbers for you and for the sake of running numbers for myself, because this market is such a great market, I do not need to cut corners. So I'm putting that vacancy factor in there. A lot of investors forget that vacancy factor. Never forget that vacancy factor. Always account for it. The 6% vacancy factor in Cleveland is going to be $72 per month that we have to account for. That way, when we have a negative cash flow, that means that nobody is renting that apartment because maybe the previous tenants moved out and the property management is looking for another tenant. That $72 that we collect every month and put aside should cover us not having a negative cash flow on that property. And again, I don't personally have a 72% vacancy factor. The money that is different in that goes into my contingency fund, and it sits there pre-tax until we need it for something. Property insurance on this property. This is a very, very high property insurance on this. You do not need as much property insurance as I have put down on this property. You can get this same insurance actually for less. This is not the actual cost I'm paying for this property insurance. This is based upon a policy that is going to pay out literally 4 times the value on this property with a $1,000 deductible. $52 a month. Still, if you factor $52 a month, you're absolutely covered. Again, we don't have to cut corners in this market because the numbers are so great. So $52 in property insurance is absolutely a reasonable cost to factor in. You'll probably end up paying less, but even if you pay more, you're going to see how these numbers still work. Low rents for this particular property. Unit A is a 2-bedroom, 1-bath. Unit B is a 4-bedroom, 1-bath. We can expect minimum rents for this property. I mean, you can always charge whatever you want on the low end. You can charge somebody $10 if you want, but minimum realistic expectation for rents, you'll be able to rent it in a heartbeat all day long, is $400 for Unit A and $800 for Unit B, for a total of $1,200 a month in expected rents. So again, these are low rents, minimum rents. This is what you can expect to get all day long in this market. You can actually get more. You can get considerably more even than the actual numbers that I'm going to show you on this property in a minute. But for the sake of calculating what you can expect reasonably and not have to fight tooth and nail for, figure this is for your rent. Now, the reason I calculate low numbers is because if the deal works with low numbers, then you can run it with low numbers and you're still ahead. If you get those better numbers, great. So many investors, especially when they're starting out, they get greedy and they want to try to charge the very last penny that they can for rent. What that means is it takes longer for their units to rent, typically. That means they have a vacancy factor that's going to be higher. The reason my vacancy factors are lower is because I stay right within the middle of the market for my rents. I don't charge too much, and I definitely don't charge too little. So my market rents are right about in the middle. I'm able to rent my units quick because they're not on the top end. I'm not having to justify why I'm charging a tenant more money to stay in my unit than a very similar unit down the street or a block over. So expect minimum $1,200 in total rents on a unit like this, a property like this. So if we take our monthly expenses, which were $728.41, and we subtract that from our monthly income, which is $1,200 in monthly rents, our pre-tax monthly profits are $471.59. That comes to pre-tax $5,659.08 per year. Now remember, we just put $10,000 down on this property. Suppose you put $50,000 into properties just like this, and you had 5 properties like this. What would your yearly profits, what would your yearly income look like on 5 properties like this? We're talking about a lot more. $50,000 is not that much to put into an investment. If you don't have it, don't put it in. Don't bother. That's fine. If you have it and it's just sitting in your IRA or your 401k or your bank and it's not working for you, you need to put it into real estate. So if we look at this example, okay, and again, remember, these were conservative numbers with low rents, okay? You are looking at a 56% annual ROI. That means in 2 years on this particular property, you have already paid yourself back the $10,000 that you pulled out of pocket to put down on this property. That's a 56% annual ROI. I know real estate investors that are out there scrambling looking for 20 and 30%. This is 56% all day long on conservative numbers, and it doesn't account for the equity in the property. This is what you're going to see year over year over year if you're not even factoring in rent increases or your tenants paying down your equity. Now I want to show you guys what the real numbers look like on this property. Now these are the real numbers, again, not even as much as it could be. These are still pretty conservative numbers, but real numbers on this property are: I purchased the property for $10,000 down, as I said. My actual mortgage is $253 per month because I got it at 4.5% interest. Again, not a difficult loan to get. All you have to do is shop around a little bit and have some good credit. Property management. My property management is actually less than 10%, but for the sake of this demonstration, we're going to leave it at 10%. It's $150 because my rents are actually $1,500 on this property. The tax rate is still the same, and the value of the property is still the same, and I estimated it's still the same, so it's still $100.41. Again, remember that was high. That's not the assessed value. I based that on the purchase price of the property. Still putting aside $100 per month for maintenance. The vacancy factor hasn't changed. The dollar amount actually has a little bit. I didn't account for it here. It's going to be a few dollars more, but again, my actual vacancy factor isn't 6%. Figure 6% and adjust the number there. It is wrong. $52 for the property insurance is still going to be the same because it is still the same property. Even if I'm getting more rent on it, I'm not actually having to pay any more insurance for it. My total monthly costs for this scenario are $727.41. Again, like I said, add a couple extra dollars for the difference in the vacancy factor, and we're still looking at the same thing here. Actual rents on this are $500 for the lower unit, Unit A, which is the 2-bedroom, 1-bath, and $1,000 for Unit B, which is actually the second and third floor of this unit. It's hard to tell from the photo, but there's a third floor that is getting, there's additional 2 bedrooms up there. So we're getting 4 bedrooms out of that top unit, and we're getting $1,000 in rent for the top unit for a total of $1,500. That looks like this when we do the math. $772.59 in monthly profits for yearly profits that are $9,271.08. That is just over, we're going to round it down, 92% annual ROI. Most people would actually round that up, and that's a 93% annual ROI. So in 1 year, we have, for all intensive purposes, made back that $10,000 investment that we put down on the property. We will definitely make it back in the next couple of months. 92% ROI using still conservative numbers. I could get better rent for this. I could trim my costs. I'm showing you just off the top of my head quick numbers that are conservative when I don't have the actual numbers. So 56 to 92% is what you can expect in this market and more. I've got properties that are getting 110 and more on annual ROI. This is what you can expect to find in this market. I don't know why more people are not investing in real estate and why more people aren't looking at markets like Cleveland to invest in. These are properties that are not difficult to find. These are properties that we specifically go and look for and look at when we go on our Cleveland real estate buyers event. We go over what neighborhoods you want to purchase these properties in. We go over how and where to find the tenants for these properties. I introduce you to property managers, to real estate agents, to investors that give loans to other investors in the city of Cleveland for 4.5% and 5.5%. I introduce you to contractors, to plumbers, to everybody that you need in the city of Cleveland to buy properties like this, put tenants in, and be able to manage it from anywhere in the world with a positive cash flow. I did a video the other day that has spreadsheets broken up based on 50% and 75%. And those are very conservative, as you can see from these real world numbers right now. Based on 50% and 75% with a $50,000 investment, what you can expect in 6 years just putting your investment back into your portfolio. Putting your investment back into your portfolio at 75% is going to give you over $600,000 in passive income every single year after 6 years. And you're going to have a real estate portfolio that is worth almost $1 million. And that is just after 6 years. Imagine if you're getting
56% or 93% or 92%? What are your numbers going to look at? If you haven't seen that video already, please go to the YouTube channel or go to our website, find it, look at it. If you're still not a real estate investor after looking at these numbers, then I'm sorry, but there's something wrong. I wanted to show you a couple of properties I was looking at this morning because as I was doing these numbers, I was multitasking and I was looking at some other properties. This is a duplex in Cleveland, same situation as the one I just showed you. I believe this is actually 3 bedrooms on the first floor. It was 3 bedrooms on the second floor and 2 bedrooms on the top. So we've got a total of 8 bedrooms in this particular unit. That means off the top of my head, minimum rents for Cleveland, you're looking at $1,600. This particular property, what was it? You can get it for $1,600. Sorry, $16,000 down. So $16,000 down will put you in this property, and that is asking price on this property. Looked at this property this morning. This is in a suburb of Cleveland. Rent for the lower unit, which is 2 bedrooms, is $900. Rent for the upper is $1,800. This is a more expensive unit because it is in a nicer suburb of Cleveland. However, the numbers still work out exactly the same types of percentages as what we just went over. This is a larger unit, much larger. I don't remember how many bedrooms it was. This is one that I'm actually having somebody go take a look at for me because I liked it that much. This is going to have better than a 93% cash flow. These properties are out there. All you have to do is know where to look for them.
You don't have to go to Cleveland on your own and figure this out for yourself. You are welcome to join us at an upcoming real estate buyers event to Cleveland. In these buyers events, we look at properties exactly like the ones I just showed you that are available on the market for anyone to purchase. We're going to go over the neighborhoods that you are looking for, the ones that are better. We're going to go over the neighborhoods that are ones that you want to stay away from, because just as in any big city, there's neighborhoods where you don't want to have properties, where you don't want to deal with the people that are there. We're going to go over the strategies for getting tenants, where to find tenants, how to find the tenants. We're going to go over all the strategies for Cleveland as far as making money in Cleveland with real estate. We're going to evaluate the properties that we look at. I'm going to introduce you to people that I work with in the city of Cleveland. Many of them I now consider friends, who are real estate agents, who are loan officers, who can specialize in giving you a loan for a real estate investment property. Property managers, contractors, plumbers, all the services that you're going to need to build a team while you are in Cleveland. And I'm going to introduce them to you while we are there. Day 4, we are going to go out and we are going to look at the properties physically that you have selected. And I always encourage everybody to come ready to make offers on properties. The properties that I showed you are the exact types of properties, exact types of numbers that we're going to be acquiring in Cleveland. Come ready to buy. You can walk home from this event with performing properties in your portfolio. This is an absolute no-brainer. Whether you're just starting off as a real estate investor or whether you're a seasoned investor, this is a market that can make you huge returns. Each of the evenings that we are there, we have social events planned. These are optional. You do not have to attend them, but if you want to, you'll be attending with your fellow attendees. We go out for dinner. Sometimes we go to a comedy club. A lot of times we'll get drinks, and it is going to be in different places in Cleveland. You're going to get to know Cleveland, the other people that live in Cleveland. You're going to get more familiar with that. And it's going to give you an opportunity to kick back and relax and get to know your fellow attendees a little better. This is always a great opportunity to start building your network with other people, because there are other people in this group that are going to be investing in Cleveland. If you become friends with them, you've got somebody to tag along with you when you go to Cleveland. You've got somebody to check in on your properties if you can't go to Cleveland and they are, and vice versa. Check up on their properties for them when they can't come to Cleveland. This is the event that will make you into a better real estate investor, no matter whether you are just starting out or whether you're already a seasoned investor. This is going to put you in touch with an amazing market that will make you money. And I just can't say enough about Cleveland. It is one of my favorite places to invest. It is not the only place I invest. My list is actually getting shorter of places that I invest as I get older and more wiser. Cleveland is still high on my list. I don't see it going away anytime soon. Join us for our next buyers event. If you need more information, you can find that at kevinmillsnow.com. That's kevinmillsnow.com. If you have questions, send us an email. We'll try to get back to you as soon and quickly as we can with any answers. And I look forward to seeing you guys in Cleveland.